Good day, traders. Welcome to my YouTube channel. I really want to thank whoever that is already subscribed and is following my videos. So in today's video, we are going to focus on the weekly forecast for this week. And we straight away begin with the economic calendar because we know the red folder news always bring in volatility in the market. Today, we don't have any red folder news for the USD. That means the USD pairs will either consolidate or make the low or the high of the week. So it could be some little bit of ranging market today. On Tuesday, tomorrow, we have good red folder news for the GBP, and we have other red folder news for the US dollar. This could bring in more volatility in the market, but we don't expect it to be too much because on Wednesday we have CPI, which will bring in the greatest or the biggest part of the volatility for the week. On Thursday, GBP also has some red folder news, and the US dollar also has red folder news. On Friday, we also have red folder news for the GBP, and US dollar doesn't have any red folder news. So it could be some good week to trade. We have a couple of red folder news which may bring in volatility in the market. Leaving that aside, let us now go to the charts, and we always begin with the DXY. So the DXY on the monthly time frame, the price action does not look good because it is still stuck in this range, and it has taken some good months. So we are not seeing good moves because of this monthly range. However, uh, we see GPP came on the monthly and took out this monthly low, took out its liquidity, and is now going back into the range. So this could bring in a pullback on a lower time frame. Uh, that is all that we can see on the monthly. It came, took out this liquidity, this low, and is now going back into the range. Let us verify it on the weekly time frame. So you see that it clearly came, took out this low, and it's going higher. So if the overall monthly trend, we are still going to the downside, we expect this weekly fair value gap to hold. So we could see some little bit of pullback into this weekly fair value gap in order for price to push lower, targeting this low, targeting this low, and consequently targeting this low. So we have to wait. It may bring in nice volatility for this week to push. Price may bring in nice volatility depending on the news to push into this weekly fair value gap, then to go lower. However, we know that we have CPI, which could violate all this fair value gap and head higher into this fair value gap that was not mitigated. So this week for the DXY, we expect it to come tap into this fair value gap in order to trade lower. So we are a little bit bearish for the bias on DXY. So on Euro USD on the monthly, we also see Euro USD doing the same for the DXY. We see Euro USD took out this high on the monthly time frame, and it also took out this high. So what happened after taking these two highs? It went back into the range. So price is now seeking for internal range liquidity. When we go on to the weekly time frame, we see that price came, took out this swing high, and also came, took out this swing high. So if we are to trade higher, because the DXY is trading lower, so if we are to trade higher on the Euro USD, we expect to see some pullback into the discount and trade higher. So here we have an order block that we could probably come to tap in order for us to trade higher. Let us go on the daily time frame. On the daily, we clearly see that this order block was also intertwined with this fair value gap here. There was a fair value gap in the order block, which last week price action came and tapped in on on Thursday, and we expected it to trade higher upon tapping. However, we still have some trapped order flow here, and price is in a range. So until we have to wait until the 4 hour or the 1 hour makes a change of character and leaves a fair value gap for us to trade higher, we shall not get involved in the market. All we have to do is to wait and see what price action will bring to us. However, we are still bullish targeting these highs. We are still bullish targeting this high as our draw on liquidity. So on the GBP USD, we also see the same price action on the monthly. We swept these highs for the previous month, and I always tell you, whenever price sweeps a high and retraces back into the range, we expect a deeper retracement into a fair value gap. So on the monthly, price came, took out these highs, swing highs, and went back into the range and closed. It closed as a bullish candle. So we expect even this month to trade higher. So if we are trading higher this month, we really have to see some discount arrays where we can tap in and trade higher. And this happened last week where we came and respected this fair value gap on the weekly time frame. We respected the consequent encroachment, which is the 50% of the fair value gap, and we expect to have some push to the upside targeting this high. Remember, I told you that price normally does two things. It is seeking external liquidity and seeking internal range liquidity. So whenever price takes out external range liquidity, it definitely has to come back into the range to take internal range liquidity. So we have to wait. Since we are in our point of interest, we have to wait for the 4 hour or 1 hour to show us some willingness to trade higher. So on the daily, we are seeing price is respecting this order block, which was also here on the daily, aligning with the weekly fair value gap, and we expect it to push price higher. So what are we left with? We have to see the 4 hour aligning with our bias. So the 4 hour has to create some fair value gaps higher, which will be tapped in and push price higher. However, here we see that there's no willingness for the 4 hour to create more fair value gaps higher and respect those fair value gaps. So our only responsibility or our role as traders is to wait until the 4 hour or the 1 hour time frame makes fair value gaps, because here we had a change in character, which we respected this 4 hour fair value gap, and now we expect to create a bit higher fair value gaps in order to trade from. So we have to wait for the GBP USD to show us willingness to trade higher. However, I always tell you, in a week that we have big red folder news, everything can change depending on the market conditions. So leaving that aside, we go to the S&P 500 on the monthly. The S&P 500, I told you, it is an index that trades mostly in an uptrend. So it is ever going up. If it has a retracement, the retracement is smaller than the push to the upside. So here we had a retracement this month. Price came last month and took out this high and went back into the range, closed in the range of that high. And this month we came into this order block, and on the weekly time frame we clearly see price came into this entire order block that we have brought from the monthly time frame, and right now we expect it not to trade lower than this consequent encroachment of the order block, which it is already doing on the weekly. So our expectation now is to trade higher. What do we wait for? We wait for price to make more fair value gaps to the upside, um, on the 4 hour and on the 1H time frame for us to capitalize on those fair value gaps and trade higher, targeting our draw on liquidity. Now it is this high. So we have to wait for the 4 hour to show us willingness for price to trade higher by creating more fair value gaps and respecting those fair value gaps to the upside. So remember the DXY, we expect some bearish price action. Therefore, any pair that is intertwined with DXY, we expect it to be moving higher. So some members asked me, the followers of this channel asked me to add on my list GBP, JPY, and gold because they trade those pairs. And let me now go to GBP, JPY. I don't trade it myself because I normally focus on Euro USD and Euro USD and GBP USD. However, if members request me to analyze a certain pair, definitely I have to do it. So on the GBP JPY on the monthly time frame, we see that price came into this order block, which was our context area or point of interest. Upon taking out external range liquidity, price ended last month with a sweep, and we know whenever there is a sweep, price may trade higher or lower depending on where the sweep is. So here we had a sweep of uh, external range liquidity on the upside, and we expect price to come into the internal range liquidity. And here we had a nice order block where price came tapped in order to go higher. So we respected the consequent encroachment, the 50% of the order block. And on the weekly, what are we seeing this week? So this is the rejection candle that I taught in my previous masterclass. I told you whenever you see price respecting a point of interest or area of interest, then you know that it may be a high probability context area. However, we have this fair value gap which we expect price not to respect at all, and we shall see consequent um, candles coming in to disrespect these fair value gaps. So we expect on the daily price now to start creating fair value gaps going higher, targeting this draw on liquidity as our main target. On the gold, gold on the monthly, the price action does not look good. We have had these two consecutive pushes to the upside, and they have all been rejected. We had this indecisive inside bar candle, and we also had this previous month which came, took out liquidity, and also closed in the range of the previous month. So we could see some ranging price action on gold on the lower time frames. However, this month we came into this uh, down close candle, which now acts as an order block on gold, and we are respecting it. So we hope price now to target the outside, the external range liquidity, and maybe we can get some scalps to the upside. But the price action is not good on gold because it is ranging, as I told you that if the price action on the monthly is not expanding higher, on the lower time frames we expect to see a range. So here on the weekly, we see that price came, there was no point of interest here to trade from because there was no clear fair value gap up. and now price came back into the range. This price action is gross. It is very, very gross. I don't encourage you to trade from it. So if you're to trade in such scenarios, you can trade tops and bottoms, the support and resistance, and yeah, that is how you can basically trade such a price action. So you mark your support zone and resistance zones, and you trade when price comes into the support zone. You take a buy, or when price comes into your resistance zone, you also take a sell. However, the price action is still gross, it is still ranging, and I really don't advise a serious trader to be trading gold at this moment. You have to wait for price on the daily to create more fair value gaps and respect those fair value gaps if price at all wants to move to the upside. So to end this forecast, we are expecting the DXY to trade to the downside, and if the DXY is trading to the downside, all the USD XX pairs, the major pairs, major currency pairs, will be trading to the upside until we reach our draw on liquidity. So traders, I really want to thank you for following this channel. I request you to subscribe, and you like the videos that I always share with you or upload on this forum. And I really want to request you to give comments, because these comments that you give help me to create good more future videos. This is BSFX. It's a channel that I created for serious traders who want to improve their trading career. So I'll be giving more insightful information, and I will be helping you to grow into good traders. May the markets move with you in this week.